Good morning, YouTube. Bennett Tyndall here with TradingAnalysis.com. Today is Wednesday, May 13th, 2020. Hope you guys are enjoying the week thus far. The market started out with a positive note on Monday. Yesterday, though, kind of towards the afternoon after setting kind of an initial high on the session, we had a bit of a pullback, some consolidation. We ultimately broke lower through the 2,900 level in the S&P 500 as LA County now has extended their stay-at-home order through July, depending on conditions. Dr. Fauci came out and was discussing the risks associated with opening the economy and states back up early, which is something we've been discussing together on the shows throughout the weeks as the COVID situation has been developing. So it's going to be interesting to see where things continue to progress. If you guys follow our Trading Analysis YouTube channel, we put a hedge on in the S&P 500, actually using the XPS or XSP rather, just taking advantage of the fact that we've seen such a reduction in implied volatility in the S&P 500, coming off of a pretty significant move there in the VIX around the 85, 86 handle. We were trading 26 yesterday. So the market divide kind of continues from the March 23rd low into where we are now. We continue to see kind of the key weighted tech names benefit from the stay-at-home situation. And given that there's such significant components of their individual sectors as well as the S&P in general, for instance, taking the XLK Sector Spider Technology ETF, and you've got 40% of that made up of Apple and Microsoft. So as Terry mentioned a couple of weeks back, we're kind of seeing this division and divide where we have the haves and the have-nots, and it's becoming more of a market of stocks as opposed to a stock market. So without further ado, let's go ahead and bring in the team. Good morning, Terry. Good morning, Alex. How are you guys doing today?
Good morning,
morning,
Bennett.
guys.
Good morning, Terry.
What's happening, gentlemen? Just watching futures tick up just a little bit, trying to recover some of that push lower into the close yesterday. I was looking at the internals, and really the internals have been kind of quiet just overall throughout the majority of this move back, which has really been a little bit interesting. And we continue to track those two possibilities. So what's happening, guys? How's your morning going today? Anything you're watching? Anything transpiring in the pre-market?
I just saw the, like you said, the futures are slightly higher. So I did see yesterday's sell-off start late in the session, and it was, a pretty significant drop. Basically wiped out all of this week's earnings, and going back, I think, to last Thursday. But that was probably the largest down bar we've had in a couple of weeks. I don't see anything as significant as that maybe all the way back to April 7th. So that was the first biggest down move. The thing I've been watching is the VIX. We got a VIX all the way back down to a 26 before the market rolled over yesterday. So all the way from an 84, something up in the 80s, all the way down to a 26. We've been tracking the VIX too. I think I'm starting to see a lot of momentum shift in several stocks and sectors. We're seeing a lot of stocks reaching significant Elliottwave intervals. I think it's possibly telling us we're due for some type of correction here. We've been waiting on that with a hedge play, and every time I think about wanting to put one on, it seems like the market pushes just a little bit higher. So
That's so true. It's been a really interesting market environment, and difficult to have conviction on the upside or the downside in this kind of a condition. And it's one of those instances, and I guess trading small. I think capital preservation is key in this kind of environment until we see a more decisive kind of trend establishing move, because as we've been looking at, we do have two very distinct possibilities from an Elliottwave standpoint. As you just mentioned, though, we are reaching some pretty key levels in the Apples and Googles of the world. We're tracking a couple of possible setups, so we'll briefly go through those with you guys before we carry on any further, we've got the futures are up about 0.4%. We were up about 0.5% a few minutes ago, but pulling back as we approach the open here. So, guys, let's jump over to it. Taking a look at the MotiveWave platform. Excuse me. As you can see, guys, for some reason, I don't know if you guys are experiencing this on your end, but yesterday's price action, I'm seeing it on the daily, so I got the daily candle print, but for some reason, I'm not getting from TD Ameritrade into MotiveWave the
Let me ask you a question, Bennett.
Yeah.
Did you update to version 15?
The one that hit yesterday, I believe it was, or the day before?
Yeah.
I have not. I was going to do that after the stream. So
Okay, well, that was the MotiveWave guys asked me yesterday. They said some clients were not seeing some of their data updated in on the S&P symbol, and it might be something with TDA API.
Yeah,
I was able to see 1 minute data. I mean, if you switch to your 1 minute chart, are you getting it on the 1 minute chart?
negative. 29.30 is the last print I have there.
Yeah, there must be something going on with the API. I told them I didn't have any issue. I was seeing the 1 minute data tick by yesterday evening.
Yeah, it's not the end of the world. We'll work with it, but
hey Bennett.
Yeah.
Bennett, they're saying my volume is much higher than Bennett's. Bennett, can you boost your audio gain a little bit?
Absolutely. Check, test, 1, 2, 3. How's this sound? Any better?
A little bit more.
A little more. Check, 1, 2, test.
All right, we'll have to wait about 30 seconds on that because we got a decay. They said it's hard to hear you, Bennett, so we'll see if that fixes it. How about Alex? Alex, can you say hello?
Yeah, sure. I think my audio is fine. At least I don't know if the viewers are hearing me well.
Yeah, your audio sounds good. I just bumped mine up a little bit more. So.
Okay, take it away, Bennett.
It should help. So guys, we've got this completed 5-wave structure. There's one thing that I think you should be aware of if you're looking to trade any possible 3-wave pullback in the event that this is a bullish continuation to the upside. And off of the April 29th high in the S&P, we do have a nice little motive impulsive 5-wave decline. The move back that's followed has been pretty aggressive and not very typical of what you would expect out of a wave 2, with the exception of yesterday's move into the close. Now, technically not invalid. We have not breached the origin of the wave 1, so it's still possible that this is some sort of 1-2 in the makings of an A wave and as part of a wave 2 correction. Now, we discussed this last week in the fact that this move here could very well still be 1 and 2 of that orange wave 5. And give me just 1 second here, guys. All right, so looks like my audio is still a little bit quiet here. Let me boost this just briefly, and then we'll go from there. Check. I'm going to go ahead and drop some gain on the software side, and then I can adjust my my audio mixer if necessary. So the possibility that this is 1 and 2 as part of that orange 5 still remains a possibility. So wave count and validation there would be 29.54. If we were to break above 29.54 for some reason on the session or into the next couple of days, that would be something to be watching for. Alternatively, we are seeing the makings of now a 7-swing price structure, which is often corrective. 7 swings being corrective, 9 being impulsive. So at this point, this could very well still be a monstrous B wave back to the upside. We're just literally a stone's throw away from the highs in the NASDAQ 100. It's been pretty remarkable. If you look at the equally weighted Qs, QQQ, you're not seeing as broad of relative strength, so it is kind of focused in those key weights. But this is why in the video that I put out last week, we discussed the fact that from a long-term investment standpoint, if you're looking to take advantage of the current situation that we find ourselves in. You need to obviously be doing so very selectively, and you need to be scaling in. Obviously, dollar cost averaging, fantastic strategy for longer term investing. But for those of you who are looking to kind of get in and get out with the major swings and turning points in the market, if you missed that March 23rd low and you're looking at this ridiculous move back and experiencing a little bit of FOMO, now is not the time to be chasing to the upside. We're getting very technically overextended when just looking at your basic indicators, and we're due for some sort of a corrective pullback, regardless of if that is a brief three-wave correction or if in fact we're in for a larger decline. Perhaps we do get a second wave of COVID and we see states extend stay-at-home orders and we continue to see that impact on the economy. Then perhaps we could be looking at that larger correction lower, which is why in the trade that we put out on our YouTube channel, we took advantage of the fact that we saw implied volatility drop to some 30% in the S&P, looking to position for the possibility that in fact we do retest the lows and break through, or at the very least, we're setting up for some sort of a correction to the downside. Taking this discussion away from the S&P and looking at the SMH, semiconductors have been performing very well in this market. And we're kind of in a similar situation here in that we've printed a 5-wave move off. Whether this is A and B of all of wave 2 or simply 1 and 2 of A is yet to be determined. But this does imply the fact that we are kind of nearing a little bit of a turning point and potentially looking for a period of correction and consolidation. One topic I want to touch on before we move any further, I wanted to go over our oil chart. We had a request for that this morning. So taking a look at our crude oil count, we've been looking at the idea that we are in this complex correction. And out of this X-wave triangle on our public YouTube blog videos, actually this was on our website blog, we began to track this orange wave 1 together. We had that nice wave 2 back, and that's when that third wave decline set in as the Russia-Saudi Arabia situation began to intensify, and you saw that that impact spill over into crude. Now, one thing to take into consideration, front month contracts at the time did go negative. The longer dated contracts did not. The low that we saw on the other contracts was around 650. So at this point, we do have a completed 5-wave move, and we've seen a very significant rally, which is really in line with the idea that this is some sort of a B wave back. One thing to take note of is the fact that just because those front month contracts went negative, I wouldn't necessarily be using that price data in your Elliottwave work, meaning I would focus on the next contract and look for your wave developments there. Like for instance, if you were tracking this as some sort of A-B situation or 1-2 situation, and you were using the fact that we went negative as invalidation, it just doesn't really hold true. Guys, I don't know if you guys agree with me, but I think it's safe to say that the price structure and pattern development remains intact on the June and July contracts, even when we had the I think it was the June contracts I think that had the issues. But regardless, I don't think that impacts the wave count on the other months. Any opinions on that, Alex or Terry?
Go ahead, Alex.
Yeah, I mean, yeah, that's the main wave count. There is some few possibilities, but I think that current count, yeah, this is one of the what I'm also kind of checking, either a triangle or that one before. But I think that if we look the possibilities of the economic recovery, I think the oil will also be very dependent, as Terry knows, with the further cuts, because I have shown the chart yesterday on our private member Facebook page. Basically 164 million barrels of oil are floating around the world in tankers, which is a huge amount. And it will take time this to spend once economy recovers. So I think the oil can only progress on the upside if we see additional severe cuts in the production. But then we still have a large problem of storage, which is everywhere now. So I think that the current wave count represents more of a fundamental reality with the one more push down then this correction is finished.
Yep, very good. I completely agree. But guys, just keep that in mind. Just because we went negative, that was kind of the main point that I wanted to get at there. That it's not going to invalidate price structure on your other accounts there. So pretty incredible move there. Before we move into sector rotation and the macro and Forex and crypto world, I wanted to touch on a couple of Elliottwave setups that we are tracking here at Trading Analysis and looking to act on here in the near future. Stock number one that we're watching here is Facebook. And Facebook has been coming off of, and I don't know if you guys recall or you were here for the discussion that we had, I think 3 or 4 weeks back when I was looking at the XLC, Communication Sector ETF. We were overlaying Google, we were overlaying Facebook, and we were looking at the fact that we had 3 near identical Elliottwave corrections that had completed within those particular stocks and charts. Now, Facebook, going back to the March 19th low, that's where we established the low in Facebook as opposed to 23rd in the S&P. We have this nice move up in 1, down in A, 3-wave move back in B of a wave 2 flat. We have equality of corrective waves C and A within the wave 2 correction. Then we have a kind of a smaller version or smaller fractal of that same Elliottwave flat. So kind of a little big 3, little 3 situation going on there. Here we have a nice 1-2 acceleration gap in wave 3, down in wave 4. Blue wave 4 squares up perfectly with wave 2 of the same degree. And from there, we're into a little bit of a shallow extension zone for blue 5. More importantly, we're up against that 1618 of orange 3 compared to orange 1. That came in at 218.24, and that's very close to and near the old all-time highs there for Facebook. So we've got kind of psychological price resistance along that 215 to 220 level. Simply looking to get a position on for consolidation, kind of back towards the area of the previous 4th and near that 200 handle. If you were to take a look at SOCL, which is a social media ETF, you'll see a very similar count in store here. Off the lows, we have a nice initial 1-2, extended wave 3 in development. We have wave 4 scoring up to wave 2, and we're rolling off of kind of that shallow extension zone. So once we get confirmation that the markets are beginning, and as we can see, futures are ticking pretty significantly to the downside as I glance over at the other trading desk. So we'll keep our eyes on this one. Google is another chart that's come a long way. Taking a look here at our red count, we're going to jump you over to the 1-hour chart, and we're just going to take a look at price action off the lows. Price action off the lows gives us a nice 5-wave move. 3 waves back here in wave 2. Wave 2 was a near spot-on 61.8% retracement. Love to see that fib at work. From there, we have a nice little extended 3rd, a wave 4 that's a 38% retracement. More fib at work there. And then a nice extended wave 5 as well. Within wave 5, we have wave 4 squaring up to wave 2. And we completed into equality of 5 and 1. And more importantly, 61.8% of waves 1 and 3 combined. So this is one we're watching for signs to begin to roll over into some sort of a wave 2 setup. So as you can see, the S&P, the SMH, and some of these individual names that we're watching are kind of nearing a completed pattern. Apple, we just talked about the fact that Apple and Microsoft make up 40% of the XLK. The XLK has been performing very well in this recovery effort. In fact, if we take a look at the chart here, off the lows in March 23rd, spot on low with the S&P, we are at or near the upper end of this extension zone. So our initial shallow zone at 300 we discussed. We ran into that 300 on the 1st. We consolidated and eventually broke through, back tested here on the 6th. And now we're either in blue 4 of orange 5 or we just completed this orange 5 of green 1, which would anchor that wave 1 there, setting us up for that wave 2. So there's Google, Apple, 2 charts that are nearing a likely completed 5-wave motive impulsive advance. So all of these signs are kind of in line with the fact that we are nearing some consolidation. TLT, we'll just touch on this here. We've got a couple of counts, but I'm watching this support zone for a little bit of a response to the upside. So guys, let's go ahead and transition into some sector rotation. Curious to see how things... Yes, please.
Hang on. You got a question here from one of the members while you're still on the chart. So put it there in Slack for you.
Ah, perfect. The question is from Richard. It says, I am short on SPX, but I see the same fractal that occurred back in May to October 2019. Can you see a breakout of this potential running contracting triangle? Okay, let's see if I can digest this here with you guys together. So I'm short the SPX, but I see the same fractal that occurred back in May to October of 19.
Go ahead and put your S&P chart back on the screen, Bennett.
Yeah, so let's take a look at this. So May of 2019, we are here.
May to October.
And we've got
He's talking
October.
about this whole triangle episode, yeah.
Mm-hmm. So what time frame?
Could we copy and paste that over to the right? You know, if you take the lows off of the December 26, 2018, and we make that run up there, how do you compare that run up to the run up we've had since March 23rd? And then could we have a similar fractal occur from where we're at now? You would probably put this on your other wave count, or you've got us up in A. Could you then propagate that same fractal from there?
So let's work through this together. Let me fix some of my visibility preferences here. Nope, that is correct. All right. Okay, so this is actually something that we did discuss a couple weeks back. And we were looking at, let's just go ahead and use a blank chart here to illustrate this. So the only way that I see the current price action off the 23rd low into really now and beyond as unfolding as a triangle, which we have here, up in A, triangulation in B, break higher in C, is if in fact we're in a much more prolonged B wave, and we end up trading something along these lines.
Yeah, you could probably, you know, since we had, I think you'd have to move your triangle B wave up higher. You can see how that previous triangle, the B wave was not very deep. It was much more sideways.
Mm-hmm. So over here, we had, here we go. So over here, the B wave at the orthodox low was not even a 38% retracement. So if we were to anticipate or try to forecast a similar move here, it would be a very shallow kind of sideways move in some sort of a B wave fashion, and that would give us, you know, this possible. And in fact, we could take this one step further, and you could try to squeak, I don't like it, but you could try to squeak a 3-wave move off the top. which would allow for your B wave to retrace as much as 100%, if not be a 1272. Guys, Alex, Terry, feel free to chime in. I don't see this as the most probable count, but it is certainly a possibility. What do you guys think?
I couldn't discount it. I mean, just like, back when we made that prior A wave in 2019, we had no idea that there's a triangle about to unfold. We were forecasting the same kind of zigzag pushing up in that. Either we were trying to think that was wave one, and then we're looking at two, or we're looking at A down and B up and C. The triangle formation takes time to evolve, and it's not one that you can immediately ascertain that is going to happen. Alex?
Yeah, I mean, you can look several different possibilities here. I guess that I will definitely look for the fundamental picture in terms of data and COVID and recovery, and then I would like to align that. When you do a wave count, they definitely need to find some support. I mean, we have now, for example, if you look the current move on the upside, it is a clear big disconnect where we are now fundamentally with all the negative data that is coming out. And clearly, we still can question the validity of this move on the upside, because it is pricing in very fast recovery in the economy, which we still didn't even begin. So I guess you can kind of look different kind of corrective pullbacks that is possible, but I think that will all depend. I guess when we go down in a wave B or two, I would like that a little bit a fundamental picture starts to look better in the sense of a faster recovery, and then I think that in that case we will not go in a more prolonged correction. I will then anchor this fourth wave for this flat there, because I think it corresponds the most. So I mean, you can play with the wave counts always, but just it is important when you do that, guys, that you don't bias yourself towards it too much. Okay, so for my perspective, I will take our stance from trading analysis that we are in some pullback, and then I will probably be a very small long, and then wait another confirmations. But for now, all is possible always. I mean, you have to play with the wave counts like we do all the time. I mean, we can make really 5 wave counts here, and maybe only 2 will be really kind of a valid interpretation. So I think this wave count, it's for now. Me personally, I'm still a little bit tilted to a bearish wave count. Looking the fundamentals and the disconnect, but 5 waves up always kind of warns you that that you might be wrong. So I'm still an observer of this great disconnect, because if you look all of the data, if you look that the world economy is still blocked, that central banks are doing massive and starts to do a massive demonetization of debt, and that they will do that definitely in the future. Even if we start to go negative on rates in United States, which we might go in Canada. Now, last night, the New Zealand also implied the possibility that they might go in negative. I just don't see where this money will go except into the gold stocks and maybe cryptos, but I think we'll probably go negative in the next few months in several countries. So that's for now pretty bullish.
Yep. Yep. And another thing that you guys need to take into consideration when you're looking at the possibilities for what's going to transpire off of that March 23rd low is you also need to kind of be bringing it full circle back to your higher degree Elliott wave count, right? In this particular interpretation, our house red count, going back to the credit crisis lows in 2009 is when we begin this green cycle degree 5-wave move, which you'll notice we have a wave 2 flat here. This would be a wave 4 flat of the same degree. Doesn't quite meet the guidelines of alternation. That said, they do square up near perfectly in time to one another. So time elapsed from the April 28th, 2010 high out of this orange 5-wave move to the end of this wave 2 correction in September 2011. We're now seeing essentially a beautiful squaring of the move off September 2018 to March of 2020. Equality comes in, or I should say came in on the 9th, call it, there you go, the 10th. Got my mouse perfectly over that. The 10th versus the 23rd. So it's entirely possible that it is simply a 4th wave flat that's completed. We also need to be very much so aware of the fact that this could be simply a counter trend corrective rally back to the upside prior to resuming the dominant corrective move to the downside, which ultimately we would have forecasted to around 1800 to 2000 support. I would love to see a move back towards 1800 to 2000 in the S&P. I think it would present a fantastic longer term entry opportunity. So guys, we're already running low on time. Mr. Terry, you ready to bring us up to speed with some sector rotation here?
Yeah, I'll make it quick here.
All right, the screen is yours, sir.
All right, so yeah, this week we got 2 days. You can see this big candle I was talking about here that basically took out all the gains we've had, for the last 4 or 5 days. And we've got futures positioned slightly lower this morning. I think Fed Chair Powell is talking right now, and who knows what will come out of whatever the Fed speak is. But yeah, Bennett's covered the S&P chart. This is the current week's movement, and pretty much all of this happened in just the last couple of hours yesterday. In the sectors, where the real estate sector for the week is now down 5.4%, with financials being the next lower, industrials and energy. So really the only thing that's positives or hanging on positive so far is healthcare. I will say that technology is pretty strong up here, right? So it's on the left-hand side here. So whatever this downtrend is going, it's basically taking out real estate, financials, industrials, and energy. Here's the weekly sector rotation, and the key thing that I harped about last time, and I continue to show you, is keep your eye right here on the XLK, right? So we saw XLK a couple of weeks ago. We saw XLK, the tech sector, being the one pushing down towards the weakening quadrant, and then I said I saw a turn happening about here. I'll zoom in a little bit there, and then now look, technology is now pushing itself back up higher in both relative strength and momentum. Here's communications and discretionary, similar vectors, but obviously technology's got the highest relative strength. Now, healthcare is still got a higher RS, but healthcare and staples have both rolled over dramatically. They're losing momentum quite rapidly, and I expect to continue to see that push south. Here's utilities, here's real estate, industrials, financials. Financials is showing a little bit of a positive sign here. They are very deep down into lagging territory, but you can see that at least there's been a bit of a slowdown or a stall in momentum drop, and now we start to see the momentum climb. It's got a long ways to go to get itself back out. Let's go ahead and just jump right into the financial group here and take a look. This is financials compared to the S&P, and obviously the majority of everything in this group is going to be down here in this lagging quadrant. I see several of these stocks, AIG, Citibank, this is Bank of America here, and PNC Services Group, JP Morgan. You can all start to see all of them got the little similar curves in them where they're starting to make a bit of a reversal. I see that as a slight positive sign, but not ready to jump in and buy these guys at this moment. Let's look at this financials. When we look at it comparing the to the XLF sector itself, you can see who are the leaders in the XLF, right? So this table is sorted by relative strength ratio. Progressive has been in the lead for quite a while, is now starting to lose momentum, but it's a vertical move downward, so it's really only a momentum loss. It's not losing any relative strength. This is still holding on. It's a leadership position here, as well as SPG. But all these guys are pushing down, so they're starting to lose momentum respective to the financial sector. About the only one I see going positive right now is Charles Schwab. Right, Charles Schwab's got a positive vector. PNC, Bank of America are coming up out of the lagging quadrant, but they're not quite there yet. So financials is not a good place on my radar. Let's jump over and take a look at. Let's go to communications first. Since Bennett was talking about Facebook and Google, this is our weekly rotation, and this is compared to the communication sector itself. You can see our prior leaders, Netflix, Activision, T-Mobile, all of these guys, they've all made these little hooks, so they've all started to drop in momentum, retaining their strength, but this momentum drop, I think, is part of this market pause that's happening right now. On the opposite side, though, you can see that Google and Facebook both have positive vertical directions in their arrows, and I think they're going to be potentially good candidates to ride out whatever this correction that's about to unfold will be. So that's a good pick, Bennett, for you there. Let's jump over to technology. The story here with Apple, we've been talking about this for weeks. I told you Apple, I saw it coming down, and I got real nervous that Apple could move across and go over here into the lagging quadrant. It quickly reversed momentum. And once you saw this hook in momentum, now we're starting to see Apple continue to rise. It's rising vertically, and this is compared to the XLK. So these are still your leaders here: NVIDIA, Microsoft, PayPal, Adobe, and then here is Apple. Apple is down in the weakening quadrant, but it is rising rapidly in terms of momentum. Oracle has moved over into the leading quadrant. A little bit of a decline here, but not serious. So yeah, I've been telling you that to get into Oracle, and I think that's a good opportunity right there. Let's take a quick look into healthcare and see if we see anything shift here. Let's pull this up, comparing to the healthcare sector itself. Abbott Labs continues its rise. So does Amgen. A lot of these guys are breaking out of this 2 standard deviation filter. Not all, though, because many of these biotechs are still lagging down here. They've made a little bit of a hook, but not really anything to bite on just yet. Okay, Gilead, Lilly, and Regeneron continue their leadership position. They're just showing declining momentum at this point in time. Let's jump over here and take a look at consumer discretionary, because I see some things happening in consumer discretionary. Amazon, Dollar General, eBay continue to be in the leadership role, comparing yourself to the S&P. Let's compare this. This is supposed to compare this to the XLY. There we go. Let's try this. So now comparing to the XLY, again, they are still in the leadership role. But I see Target coming back up here. Home Depot, I saw rising compared to the S&P, but actually falling a bit comparing itself to the XLY. So Not really any big breakouts here. Still a very large standard deviation, very high volatility in the consumer discretionary stocks. All right, I'll give it back to you now and let Alex take it from here. We got people, Alex, want to talk about gold and oil. So if you got time to do that, maybe dollar note and
I
dollar
didn't hear
CAD,
you very
dollar.
well.
I said people
Okay.
want to hear about gold and oil and dollar NOK and dollar CAD from you. So if you can touch base on those real quick.
I will mention it. Yeah, there is one question here from Sang and Richard about the megaphone pattern on the S&P. So guys, we are using the Elliottwave methodology. So from that perspective, a broadening triangle exists, but it invalidates the current measures for the broadening pattern according to the Elliottwave rules. So we are not looking for this structure anymore. Okay.
Yeah,
So
even
the
Elliott Wave
megaphone.
International operator discounted that wave count. He eventually abandoned it.
Yeah. So am I up, Bennett, or?
Yes, sir. The screen is yours.
Yeah.
Okay. I'm just gonna pop up
You got your
questions
big
here.
chart pulled up there.
Yeah. Okay. So for now on cryptos, since we have a crypto service for our members, we are looking several options. First one is a little bit more bullish one, which I'm more leaning towards this triangle. But as we are using this type of methodology, we are looking for several degrees of trend and from several angles of perspective. So I'm looking for this triangle to find its rest around this 5,000, 6,000 levels here. If this turns out to be really a triangle, this will warn us that the move on the upside will be the last one, and also that will be actually the final fifth move in this ongoing orange wave 3 that we are tracking on a larger time frame. So I'm still patient with the members. We are kind of contemplating a small shorts here on this pullback. So I'm looking for a little bit more upside and then a confirmation, and then we might put some shorts to down there for the possible A wave. On the currency front, well, I'm gonna first trying to look for a dollar index where we are tracking some possible highs of this wave 2. But I mean, the main question here is that are we in a deflationary or inflationary environment? And clearly we are in a very deflationary environment. So the reason why the dollar is still not up is because of the number of stimulus and the swap lines and the liquidity that was scattered around the world by the Fed with the central banks to basically satisfy the demand for dollar liquidity. And for now, we don't see this push. I'm gonna stay slightly bearish on dollar, but I'm very well aware that the prices of commodities and current economic environment is very deflationary, which is basically good for dollar and bad for other currencies which are commodity based and for the risk-on currencies as well. What is keeping me to be a little bit more on the short side in the dollar is the wave count that we have on a pound dollar and Aussie dollar as well. So pound has, after this big move to the downside, has kind of trace out 5 waves up here. So on the smaller time frame, I'm kind of looking for a pullback in a wave 2 or a wave B. And from the Aussie side as well, which is clearly a currency commodity, I see already potential 5 waves up development, and I'm looking for some type of a retracement here in a possible flat correction with the S&P. So a few of these wave counts kind of implies that dollar move on the upside might be over. So I'm really watching this very carefully, because if we are done with the dollar on the upside in this deflationary environment, what will be when we start to move a little bit within possible inflation in the system from all of the stimulus, and what if the with some measures Fed even further push the dollar lower, which I think will be very good for the world. So I'm prepared to bet against the dollar very soon, but I'm waiting this finishing pattern to complete. As the gold is concerned, the gold is still kind of not showing its hands here on this wave count. We have been tracking few wave counts on gold. For now, for me, I cannot be bearish on gold and bullish on other currencies, and bearish on dollar. So I'm also watching gold for signs what's going on. My primary wave count now is relatively bullish, and I'm waiting the possible move in this C wave, as I said last time, to this 160 handle or 160.50 handle. So that will be very telling. I don't want to see a break of this 1451. That will greatly diminish for me the possibility we're going to continue higher. And even if this is a 1-2-1-2, and then we have a smaller 1-2, which I don't put very much often on the board, I think this type of movements are really rarely to see. But in this case, it's viable. If you look this wave count, if we get a dollar move lower, definitely gold might start to put a wave, green wave 3 on the upside, which might be very sharp. So I want to see a little bit more confirmation. I think the small entry with a small stop loss for my trading perspective and my trade will be here for a possible move on the upside on gold. Oil-related currencies, I have to pair up with the interest rates and the gold. Dollar CAD, I'm looking for a bit of a continuation to the upside on account that possibly Canada might move negative soon. So I'm still going to stay relatively bearish, which are here. Definitely, because that will invalidate definitely the bullish wave count. For now, I'm looking here for this wave 1 and 2, and I want to see some fundamental approval that Canada might go negative first, and then I will look for this 5 waves down in A, up in B, and down in C as a support level for a possible continuation of the strength of the dollar. So in that respect, we see also the disconnect. Dollar is somehow going higher against oil currencies, and it's weaker against some of the non-related oil currencies as well. So this is a bit of disconnect. So if we get also some movements in oil, I'm gonna stay relatively bullish on this oil related currencies. If we look the EEM markets, which I'm watching also very carefully, they're also portraying a possible end of the dollar move on the upside. A very nice, very big uptrend in the dollar Turkey. I think we're going to see a fourth wave pullback, one more push up, and I think dollar move on the upside is over, and we are going to see a pretty large correction on this pair. Also, if you look some others like dollar ZAR or South African Rand, actually we also have a pattern which is kind of out of a triangle, which also telling us that dollar might not have a much more room on the upside before a big reversal. So this EEM currencies, which has actually, or countries which has actually a large exposure in dollar, corporates have exposure in dollar, also telling me that we might be a bit cautious on a possible move for dollar on the upside in the midterm period. So I'm watching also that very carefully. What actually I can show you guys also some of the pairs which are not so good for trading, For example, this Euro CAD, which has been going pretty much sideways for a number of years, I see a possibility if Canada goes negative that we push this wave C on the upside either to 618 or even to equality, and that will be some type of a flat corrective. But I think more in a line of this upside target here. So as long as we hold this low around, let me see, where is that? So I will push my wave count invalidation to 142.67 here on dollar CAD. What is interesting also is if you look Aussie dollar, Euro Aussie, that potentially this move to the upside has been finished, which are also flagging us that Aussie is going to go higher in the future. From this fifth wave highs for the C wave and the quality of the measure move between wave A and C, we can count now 5 waves down on a smaller time frame, which implies that we're going to get some type of a correction and possible continuation to the downside. Either this is a wave of A, this will be a pullback in B, or a little bit more downside, and then ABC develops. But definitely this will interest me to go short euro against the Aussie dollar for a relatively big move to the downside in the next year. Definitely. So I'm also watching this one as well. So there is a few very solid midterm trades developing from my taste here, and we are already structuring some type of entries and trades with our members. So that will be it, Bennett, for now. I'm just going to drop a link for our service who is interested in blockchain and forex service, so you can find it down there if you like.
Yep, I've actually got that. I've got that link handy. I just posted it in the chat.
Yeah, dollar ruble, same situation, possible triangle, a little bit more upside as well.
Very good, Alex. Much appreciated, sir. I hope my volume is a little bit better. I was making some adjustments here in the background as you were talking there. So, guys, hey, if you enjoyed the content, please subscribe, give it a thumbs up, and be sure to turn on notifications. Kind of helps the YouTube algorithm. Let them know that people enjoy the content, and it helps get the word out there. So, guys, thanks again for tuning in. Check us out, TradingAnalysis.com, stock options, Forex and cryptocurrencies, and absolutely the S&P started to the morning out here with a little bit of weakness, so we'll be curious to see how things develop. And members, we'll see you in about 20 minutes for the Premier Member Webinar. YouTube, be safe. We'll catch you next week. We've got a guest lined up in 2 weeks from today, so we'll keep that a secret, and we'll reveal it maybe next week. But Terry, Alex, awesome work as always. Catch you guys next week.
Thanks, guys.
Take care, YouTube.
See you next week.
See you then. Take care.